The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 11 April 2025 with this week's weekly perspective. Well, I'm not going to go through the markets this week. I'm going to talk more on other topics. First of all, the landing page, of course, at themorganreport.com. For those that don't know, we post almost all the public interviews here on the blog, which if you click that, obviously you'll come up and you'll get it. A couple I like to point out for this past week, most recent interviews. It's happening, buckle up. This was an interview, first time ever on Canadian Prepper. Nate and I did a very long interview, and I brought up topics based on his questions, of course, that haven't been asked before. So there are a little more insights in the silver market than perhaps you've considered. A little bit more talk about, World War III, silver being a metal of war, what that means in the long term, and that type of thing. So that's one, if you have the time, you might want to look at it. And the other interview for most recent is this one here, silver shortage numbers and inventory. I break it down a little more than you've probably heard in the past. The difference between the retail silver market and the real silver market. The retail silver market, the 1 ounce coins, government issued coins, silver maples, silver eagles, Austrian Philharmonics, the silver Krugerrands, etc. All that, rounds, 10 ounce bars, kilo bars, 100 ounce bars. All that is part of the silver market. There's no doubt about it. However, that's a subset of the commercial bar market. In fact, almost all of your government-issued coins are made from 1,000-ounce bars. I mean, I've toured many mints in my life. I've been through the Sunshine Mint probably 3 times. And watching the process is quite fascinating, at least to me. But it starts off by smelting down 1,000-ounce bars in a big tub and making it a liquid and adding a little bit of copper to it, believe it or not, but still keeping it 999 fine, and on it goes. I won't give you the whole process. Anyway, in this interview here, I break that down. It's something to pay attention to because some, especially new silver investors, can get caught up in some of the situations that are in the retail market that do not pertain to the market at large. And this is where you see these huge premiums that we saw not that long ago in the retail market, when really what was stocked on the shelves as far as 1,000-ounce bars were concerned was ample inventory to meet all demand, if and only if it could be converted into retail product in short order, which of course it takes time. And back to the front page, we've got these real quick links to get to other parts. This, of course, is the YouTube channel. So we're on there. And on this channel, you'll see even more posts. And one thing to point out here is, which I've done in the past, is to show you some, not only what, interviews I've made, that type of thing, some interviews I've done. This is one that was very interesting. I did with a Legal Eagle friend of mine. This one with Ed Gustally about what's going on as far as his perspective on the big picture. If you haven't watched that one, I definitely recommend it. But anyway, the point I want to make here is on these posts. And that are posts that I put up of things I think you really should pay attention to. They're not my videos, but this one on A Man in America was fascinating. I just posted this a couple days ago. I can see 17 hours ago. It's a long interview, 44 minutes, but it's really interesting or disturbing, the truth about the tariffs that no one is talking about. I actually watched this one twice, and I seldom do that. So I'm posting that. It deals with technocracy more than anything else. Let's say, looking at both sides of the coin on the technocracy question. Another one is taking a look at China, and this young man talks about Gerard's take on what's really going on. Kind of a fascinating interview. It's not that long, about really we have more in common with China than we would think. And it breaks it down in a way that I don't think most people think about. I wanted to bring that up. So again, there's this last one. This was a couple of weeks ago, 11 days ago. And this one was fascinating to me breaking down the difference between the types of dystopia that we're facing, one by Orwell, one by Huxley. And this author was talking about it actually being a blend of the two. So I just want to point that out. I'm constantly thinking about, what I'm going to write about, what I'm going to talk about, what I'm going to podcast and all those things. But some of these are just so well done. I do post them often. However, they are so controversial that they get banned by YouTube later on. I'm not going to scroll too far down. It doesn't look like too many have been hit recently. But often when I go review this, there'll be some and they're blank. They've been taken out. So I'll show you my email here. This came this morning from David Nino Rodriguez. And this is a book from Colin Plume of Noble Gold Investments. And this is a book called Silver is the New Oil. I actually wrote the foreword for this book. I've been in touch with Colin, and very well done. There's a few things that I don't agree with 100%, but on balance, it's a very excellent book, and he does make a very great case, very objective, and I learned things from the book. So I've never said I know it all, and he pointed out some interesting factoids about the silver market that are fascinating. Actually, throughout the book, it kind of uses it as a meme, sort of things that kind of pop out, and he puts them on, throughout the book occasionally that kind of like stand out. A lot of the stuff you've already known, that we're running a physical deficit, why the U.S. needs 3.5 billion ounces of silver to fully transition to solar. I've talked about that. It's a 1 billion ounce market in a year. That's with mining and recycling. If we need 3.5 times that much, that means we need every ounce of silver that will be mined and recycled for the next 3.5 years. We don't probably have 3.5 billion ounces above ground if all of it was devoted to solar alone. So think about that. So I brought up this chart from my stock charts account, and I could speak on this probably for hours, but what I want to point out is, the 1980 market, silver was very low, as you can see, for a long time. And I took the chart for 50 years, but going back in this range. And then we got this, basically parabolic move, almost straight up. And that's how silver moves. You get the big moves are almost straight up. And we haven't started that yet for the third move up, but it will at some point. What I want to make sure of on this one is where silver went on the last crisis. So we're sitting here at about $21 the ounce, and it dropped down to roughly below 9. So I'm going to count it at 9. And from that point in 2008, call it 9, it went all the way up to, call it 50, not quite. But 9 times 5 is 45. So it went up about 5.5 times in that pretty short duration, 2008 to the last day of April 2011. This time, I think we're going to do something similar. Now, in Elliott Wave, and I'm not a big Elliott Wave guy, usually the next leg up is it's actually usually double what this one is. So if this one up 5-fold, the next one could go up 10-fold. So if you look at the bottom, you could use this dropout bottom of 12 and multiply by 10 and get 120. Or you could use that as a dropout bottom as an anomaly in the illness and just say it was more like, 14 and multiply it by 10 and get 140. That's conjecture, but it's pretty much held true. So if many have pointed out, we have this huge cup, and then we have another cup, which are the most powerful formations. And when this cup really breaks through here, so it's really got to break 50, then we will be off to the races. Now, I do expect to see some consolidation in that area and some pullback. And people saying, can't ever get past 50. It's a triple top. Forget about it. You sold it all or whatever. And then for it to break through on the fourth time through or thereabouts. And then the sky's the limit. In nominal terms, everybody that ever owns silver will be at a profit. And those people that have been so patient will hold on. And any new buying will take it higher. As I just pointed out, the industrial demand for silver is basically overpowering the investment demand. And once the investment demand kicks back in, there could be, and I believe will be, competition for the same pile of silver from both an industrial perspective and a safe haven status. And just to finish off the contrast of gold during the same 50-year period, this 1980, it looks like a little blip compared to where gold is currently. And then we had this like 20-year consolidation here, and then we broke out in year 2000, around 252, we got this big move up. What I want to point out is during the 2008 financial crisis, gold got down to around 700, went up to about 1900. So it didn't even go up threefold, 2.8. We'll round it up to 3. Silver went up 5.5. So silver did outperform on that same time frame. But you see gold is going vertical here. It won't go vertical forever, although we will have to see some consolidation, probably similar to this. I don't expect this, big drop down for years and years like we see here. In fact, I want to remind everyone what I've said for many, many times, and that's in the last leg of a major bull market, 90% of the move takes place in the last 10% of the time. Now, that's not exact, but that is what happened during the 1980 bull markets for silver and gold. The massive move for those metals, although here it is not as impressive as the silver chart I just showed you, it was a vertical move pretty much in a very short amount of time. And we're seeing that again in gold right now. That silver hasn't participated in that manner yet, but it will. Point being is that this is the best time to buy because we're at new highs and there's no resistance to the downside. So any new buying pressure takes it higher and higher. Again, silver hasn't achieved that yet, but at some point it will once it gets above 50. I think the major shift is taking place and took place some time ago, but it's now being recognized. And that is that the asset shift from equities into commodities is taking place. Commodities will outperform equities from this point forward, probably for a few years. Oil is very, very cheap. The oil sector is something to take a look at, in my opinion. The metals, obviously, even the base metals, copper, some of the base metals, and foodstuffs. So if you're in the stock market and you're concerned, you might want to focus on commodity-based companies. Those will outperform what's going to take place over the next several years, in my view. That will wrap it up for this week's Weekly Perspective at themorganreport.com.